Shailendra, good to see you.
Amrish,
Thanks for taking time.
Thank you for having me.
So Shailendra, I'm going to ask you the most famous question. There's a joke which goes on in Pine Labs which says that when Shailendra first came to Pine Labs, he was a young man. That was almost 12 and a half years back.
That's true.
How has that journey been? Is Pine Labs your place for the fintech fix?
Yeah, it's unbelievable how, the days are long and the years are short. And, 12 and a half years have passed since we first invested. Actually, I started tracking Lokveer and the company 2-3 years before that. So it's actually, because, Pine Labs spun out of Global Logic. We had first invested in Global Logic in 2006, so 15 years ago. And Pine Labs was on my radar since then. So actually, excitement for what Pine Labs was building predates even the investment by 2 or 3 years. Because it was not on my first attempt to convince our partnership that we should invest in the company.
Yeah.
But I finally got there. I met Lokveer, spent time with him, as you know, very thoughtful, great product thinker, always puts customers first. And, I was just amazed. And I think through the journey, whether it was his contributions or, Sanjeev or Kush or Dev or Rakesh, so many of the core team stayed for very long stretches to build the company. And I think that was very special.
What I enjoyed the most the other day, Shailendra, was when you were talking to the Pine Labs team, you could almost talk about the HSMs and the keys and the data. How much did you learn fintech in this journey?
Oh, a lot. So, originally when Lokveer would, rattle off saying, issuer and acquirer and merchant and this and that, to me, I was like, wait, tell me again, who's the issuer? Who's the acquirer? What does this mean? So, and then he would say the aggregator, he was referring to merchant aggregator. I was like, okay, wait, okay, this class of companies is called the issuer, this class of companies. So, all the fintech jargon I sort of learned at Pine Labs. I have to admit, it probably took a year or two before I fully understood what they were talking about. And, that's not unusual for us when we make new investments.
Yeah.
But, I think, look, just the power of payments and the power of, moving to digital payments. I just always believed it was not, if this would be big, it was just when it would be big. And we just had to, stay patient and keep building for a very long period of time.
I don't know if you actually remember this, but while I was building Citrus, you and I met at a party, Sequoia party.
Yes.
And I actually took you aside and said, hey, you own Pine Labs, has become so big. Maybe it's now time to sell.
Correct.
And I kept talking to you. In retrospect, I'm just thinking you were like, what's he talking about?
No, so actually we have been approached to sell Pine Labs for years. I'm not even talking 2 or 3 years. I'm talking like 7, 8, 10 years from the beginning. So everybody thought, oh, this is a very interesting company. And Pine Labs always had a fantastic proposition for, all organized retail, right? So they had fairly strong dominance in organized retail. And I think every other payments company, found that very appealing. And so I was quite used to the conversation by that time. That, okay, I have one more suitor. And, in a strange way, these conversations only strengthened our resolve that we should keep going because we knew that we were onto something good. Look, we just stayed at it. I think the thing that we got lucky with is that the, group of people around the company were all very long-term minded. So, Lokveer stayed for a very long time, and so did all the other management team members I mentioned, and I think that allowed us to keep building.
Yeah. And Shailendra, over the years, Sequoia has built a world-class portfolio. Over the years, you've invested into some fantastic fintechs in India and now in Southeast Asia.
Correct.
How have you seen payments and fintech generally evolve over the last 10 years?
Look, this is one of our favorite areas of investment, as you know. We are sort of call it deeply invested in fintech. I think we have close to 50 investments just in fintech between India, Southeast Asia, and emerging markets, and fintech plus financial services. So whether it's Pine Labs or Razorpay or Cred or Grow or BharatPay, we have several prominent fintech companies which very feel very privileged to get a chance to be part of these journeys. Look, we just feel like, again, this is such a long-term secular trend, and payments is evolving where whether it's merchants or businesses and how they transact with their consumers, or it's consumers trying to reduce friction or transact in new ways at merchants. I think both ways there's need for tons of innovation. These companies I mentioned, some are solving the consumer part of the puzzle, some are solving the merchant part of the puzzle. And invariably, in the very long term, we think some of the companies will try to do both. And that's where probably it's where it's headed. If you look at, for example, what Square did, where they have tried to thread, through Square Cash App, the consumer side, and through obviously their merchant products, a lot of the merchant acceptance. I think there's also yet another third side of this, which is, all the software applications that should ideally be, offered to merchants. So, we see yet another class of companies probably emerging in that, which is called Fintech SaaS.
I take that as a cue what we need to bring to the board over the next few days. But closer to now and in the last 2 years' time, one of the things that we've seen is COVID has changed consumer behavior.
Yeah.
But also interestingly, it has accelerated some of the changes which is coming up in fintech. Yeah. How do you view this?
Yeah, so I think one of our favorite themes through COVID has been this idea of digitization of SMEs especially, but then even more so digitization of the enterprise. So we think this idea of SMEs adopting software is just through the roof all around the world. And I think Pine Labs is a big beneficiary of that, as are many of our other companies. And I think this is a very transformative trend because, for a country like India, there's 60 million SMEs. And if those 60 million SMEs step up their adoption of technology, digital payments, e-commerce, what have you, it just significantly accelerates, as we all know, right? Like take organized retail in India or take e-commerce, there are small percentages. Organized retail is a small percentage, e-commerce is a small percentage. The bulk is still the long tail SME, and the same distribution applies to many other sectors, not just retail, right? I think the second is, look, again, consumers, because they were forced to stay home, couldn't step out, etc. A lot of behavior has changed to doing everything on mobile devices. So I think just both merchant side and consumer side has seen acceleration, and we are seeing it manifest in ways in which it blows our mind all the time. I tell people, it's crazy privilege to be a venture capitalist because there is positive surprise lurking around the corner. Wherever you look, you're like, wait, this company, like this thing is on fire. Wait, like Pine Labs, this new product is 10x in 6 months. How did that, like your QR code acceptance, which is through the roof, or the digital. So, you may have been invested for many years, but, it's such a crazy thing to be a tech investor because, you can just have positive surprise coming your way. I mean, there's also negative surprises. There's also, things that go wrong. Many things don't go to plan. But especially in a time like this, it's exhilarating.
Yeah. Talking a little bit about Sequoia Capital and, while everybody sees the great investments that you do, what people don't get to see is what happens in the back room in terms of thesis building, identification, and then actually investing, and then even longer holding on and supporting businesses. How has that been? How have you built the organization?
Yeah, so actually, thank you for bringing that out. First, there's an extraordinary amount of effort we try to put in the back, as you know. And you've personally experienced it now for many years. So I think the thesis building, investing first, there's a lot of global collaboration that goes on. So, we're all watching the trends globally, trying to figure out, how are the needs are the same across the world. How they are solved varies, right? Depending on local market context. India has UPI and eKYC, many Aadhaar and other countries don't, and so on and so forth. So I think first, we are always trying to figure out how is consumption changing, user behavior changing, business behavior changing, and so on. So I think some of that, we are very fortunate to have, call it this, a slight advantage in seeing global trends play out. Like, for example, what happens in China is fascinating for us. Even now, even if China investments in India can't come in, the ability to learn from the trends of China is still very helpful. And then I think we just over-invested all these years to feel like we should be the best at helping founders win. So the true north at Sequoia is we'll do anything in our power to help founders win. That's the true north. And everybody's lives is sort of organized around that. In our system, sort of culturally, it's a badge of honor when you get that email saying, hey, this person was up this weekend late at night helping me. This recruiting team member, last week I got an email saying this recruiting team member has been outstanding. We've hired 3 VPs with their help. Or when somebody says, hey, I had a tough situation, government or regulatory issue, and your public policy team was able to help me, reach the right people and explain to them why we were doing what we were doing and solve it. So I think we are very deeply committed to trying to help founders win. That's sort of the core DNA. And everybody sort of finds energy in that. That's how we're structured. And I think especially in your case, you've experienced probably at the closest level amongst the full portfolio the impact of our strategic development team. So, Piyush has been a very, very close partner to Pine Labs.
Absolutely.
And in fact,
what does he do with you?
Yeah, correct. Sometimes I also wonder, how much of his time is he spending on Pine Labs?
Exactly.
Correct. So, people don't know. I told somebody that, the recent $600+ million round that we did, there was no investment banker. Piyush and team were helping to run the process with the finance teams. And this person was blown away saying, wait, for a $600 million financing, there's no investment bank involved. So I think, and this year we're having a very nice run with IPOs. And candidly, I think some of the credit goes to the strategic development team, our operating partner Bharat, our finance and legal teams. But these guys have been in place for years, right? So the strategic development team we built 4 years ago.
Yeah.
And I think the results can be seen this year, but for many years it was sort of called work in progress. So look, we're learning and adapting and evolving. But we do take pride, or call it internally, at least, like I said, it's a badge of honor when we can help a founder and we feel we made a difference. So,
And now, over the years, you've actually expanded into the Southeast Asian markets, the Indonesian markets, and you've actually invested in fintechs in those area. What's the advice that you would give a fintech founder in India when it comes to global markets and going international? Is the prize and is the pie about doing India right? Or if you built a good B2B platform, you should be brave enough to go abroad. What's your thinking on that?
First, I think fintech, because there are payment systems and they require certifications, they require very many nines of reconciliation accuracy and so on, right? You can't lose anybody's money, right? You're toast if you make a mistake. You can't get hacked. So I think you need very high quality tech platforms, and normally very deeply integrated with local banks, local payment instruments, local merchants, and so on. So I think in general, in my view, is international expansion requires a lot of patience first. Like you have to be very patient. I think on the consumer side, it's easier, slightly easier. You can launch in many countries, work off of a global platform like Stripe or Adyen or something. But I think building a merchant-centric business is harder now. Like our success in Malaysia, for instance, at Pine Labs has been a while in the making. You know, so we had to be patient. And I think the first thing is that you need to have a long investment horizon. I think the second thing, in my opinion, is there is advantages to leveraging a very, call it, proven technology platform like we are doing with Quicksilver.
Yeah.
So Quicksilver's success in new markets is, but that's like a SaaS product now, right? Like, so it's a SaaS product that we can now sell in many other markets. So I think we'll have to, companies that choose to go international should pick which products. I wish Southeast Asia or the Middle East had as fertile a fintech ecosystem as India, but it's not close. I mean, it's very interesting. It'll be there in a few years. India is at a different level because of UPI, eKYC, Aadhaar, other things. But still, look, we have 30, 40 million credit cards in India. It's like it's minimal. Yeah. I mean, it's still such a long way. I think the path to 200 cards or whatever is a no-brainer. 200 million cards. All of India all year has between 100 and 150, $125 billion of credit card spends. Yeah. Again, that is tiny. It's trillions of dollars in the US. So I think we are still so early. The amazing thing is we are so early still in the journey of fintech truly transforming people's lives.
And look, I've heard this from you many, many times, and you talk about this whole concept around optionality in payments. You always keep talking about the story around how anything that you do in the payments world will be accretive, an M&A or organic growth.
Correct.
You want to expand on this whole optionality bit?
Yeah, so we have this thesis that fintech has very high optionality because when you have payment systems, you have more than usual trust, than in any other form of business. So like merchants trust you, banks trust you, other business partners trust you to manage their money. In the EMI business, Pine Labs originates billions of dollars of loans, and then brands trust you to help them, originate, and then they also trust you to do the reconciliation of their billions, tens of billions of dollars of financial transactions, right? So I think in payments, because the trust levels are so high, it's very easy to upsell, cross-sell, and also when you manage the flow of money, It's easy to layer products. So, lending products are easy to layer. Insurance product is easy to layer. Prepaid, postpaid, different instruments are easy to layer, as we've seen with Quicksilver and so on and so forth, and many more. Promotional products are possible to layer at the point of sale. So, fintech lends itself very well because you have a platform that controls transactions. I think people underestimate in general the optionality of a fintech platform company, because and it blows my mind. Take PayPal, okay, and 20 plus years after PayPal got sold, I just read last week that they might be launching stock trading, and I think to myself, what took them 20 years? Same with Apple launching the credit card. I asked our team, what took Apple so many years to launch their credit card? They should have done that 10 years ago. So I think this also this recognition, and when you have a trusted brand and high value customers, fintech can be such a big driver of economic outcomes for this, of monetizing the user base. I am personally surprised, global big companies like Amazon or Google are not more significantly into fintech. I think they should have been. I think every OTA in emerging markets had a chance to be the first fintech company because they had the most creditworthy people flying around in their transaction history. So just my views. I may be a little crazy with my love for fintech, but I think every big brand consumer company should have a fintech strategy. And by the way, it's proven that things like General Motors finance arm became more valuable than the parent company and so on. So we have seen this manifest, or we have heard about how the loyalty points program of a company became more valuable than the airline itself, right? So we have seen this manifest even in traditional industries for the last few decades.
And to be fair, you in Sequoia Capital have been doing a great job with the Surge program and the number of fintechs that y'all are supporting. But while I was talking to you, I was just thinking about this. While everybody talks about Surge of today, in a way, Pine Labs was a part of the first Surge cohort about 12 and a half years back.
Sure.
That would have been like a single-digit investment, I would think so, right?
We started with 1.05 million investment at 6 million pre-money, correct, in Pine Labs. And then I think at 13 million, 3 years, for the first 2-3 years was slow, right? So, I mean, and then, there was some other shareholders who wanted to exit early on. So we, had a fairly large position along the journey, including majority for many years, which we have now sold down and, have the usual 20s ownership like normal VCs,
Like normal VCs, right? And you've been investing in the whole consumer side also, the whole consumer plus fintech area. In that consumer plus fintech area, what are the areas that you're finding most exciting? I know you talked about once you have the consumer, you can add into it. But how do you see that playing out?
Yeah, so I think take Cred for instance, right? Cred's merchant checkout product is a very interesting manifestation of building a consumer base and then enabling them to transact more easily on third-party merchants. So you're beginning to see the edges blur between, now having a merchant proposition because those merchants now see checkout. So that's an example to me. Or, I wouldn't be surprised if some other companies like a PhonePe or somebody else tried to build a stronger merchant proposition also over time. But, look, again, I think whether you look at Cred in our portfolio or Grow or many others, One Card, which is a new age card issuer, I actually think, candidly, we are looking, okay, if in any emerging market in this region, we could find a world-class team building a new age card issuing product, consumer product, we would be thrilled to invest. So we've been looking, any fintech founders are watching, please write to me, some platform, Twitter or LinkedIn or wherever.
And that brings me to the other point around crypto. What's your opinion on the crypto space?
Oh, it's super fascinating. I think it's one of those, very big movements. It's now hit critical mass or escape velocity. I think we have made 7 or 8 crypto investments this year already.
Really? Wow.
In 2021, maybe more, because I know we just did several in the last 3-4 weeks alone. In fact, last week, our Southeast Asia investment pipeline, we have a weekly call to discuss the pipeline, had more crypto than any other sector. So 40-50% of all deals being discussed were crypto deals. So there is a lot of crypto, very, very fascinating things we are seeing. Candidly, look, we are learning super fast. Every week we host Crypto Hour at Sequoia India. So it's one of the team members takes the initiative to educate everybody else on what's going on in crypto and share some new things. So I think we are learning fast. We are very excited about what we are seeing, but it requires a rethink of how we've operated. As the crypto world refers to us as strat VCs, traditional VCs.
Okay.
And the first time I heard that in a meeting, I fell off my chair. And I made sure we invested with that founder, the founder who called us a trad VC. Because I think we are anything but traditional, and we have tried so many new things at Sequoia India. And so that wasn't my image of Sequoia India, but when a founder referred to us as a trad VC, I sort of fell off my chair. I said, this can't be happening to us. We must invest in this company, but we must also wake up and change. That was many months ago.
That's super fascinating to hear how Sequoia has gone all into the whole space around crypto. Shailendra, we are at a very, very interesting stage when it comes to founder development and how founders have gone over the years. And you've actually seen almost 3 generations of founders, ones which were pre-2010, then pre-2016, and now what you're getting to see.
You're making me feel like I'm from some glacial age or something.
You're still the young man. What's your opinion in terms of how founders have had to change their thinking, and what are the things which have having most impact when it comes to these new founders?
I think the founder journey, founders go through cycles of exuberance and humility. Okay.
Yeah. Great
my view of the world.
Great point.
When they get early success, they go through this very big, internal exuberance and so on and so forth. It's very hard to have control over their sense of ambition and all that. When they really start building a big company, 50 million, 100 million, 200 million, nobody's ambition stops there. Everybody's, nobody says, oh, I built 100 now, and now I'm going to go home. Everybody says, okay, now I want to go to 1 billion.
Yeah.
And then I think when you realize how hard that is, and when you realize how hard scaling and truly leading a world-class, high-quality org in today's world is, and then also compound those challenges with how fast the world changes around us, I think that's humbling. So I think founders hit new bottlenecks at each stage of scaling, and then I think that's humbling. My personal belief is, the human mind has mean reversion in it. So meaning that when people get successful, they also get very confident.
Yeah.
When they get overconfident, they get blind spots. They stop learning and listening as much. They make mistakes. They get mistakes, they get humbled. Okay. Yeah. When they get humbled, they start learning again, and they get successful again. So I have a view that there's mean reversion in the human psychology. And so my point is, all these years, if you look at the various generations of founders, I think gradually as the ecosystem has developed and become deeper, founders have begun to appreciate much more both the benefits of scaling a company and the challenges of scaling companies. I actually think that has made founders more grounded and better leaders, better business leaders. The early founders of India, in my opinion, the first, second generation founders, they were great creators. They were very creative. The current generation of founders have the creativity, but they also have the leadership DNA to actually build and scale a company. And so I think they are developing, because they've had the chance to learn from other people's mistakes. Some have had their own challenges along the way or their own tough moments, and that has helped shape them into better leaders.
There are a lot of these founders that people only know through Twitter or through some videos out there. We've been lucky to speak to them at close quarters.
Yeah.
In our today's session, we actually have Gaurav also joining us.
Wonderful.
I mean, at the age of 30, 31, the kind of depth these kind of leaders have is just unbelievable. You look at a Kunal and how Kunal has changed over the years, and the depth that has come in. I think it's just wonderful for the Indian ecosystem. But on that topic, I'm also going to talk about something that we feel very proud of being associated with Sequoia. You guys in Sequoia have done a phenomenal job in supporting India through one of the toughest times that we went through. The whole ACT program, along with other VCs that you all supported, was really fantastic. Shailendra, you want to talk a bit about that?
So I'll talk about 1 or 2 philosophies at Sequoia that are very, close to our hearts. For example, I don't think people appreciate this very much. How large percentage of our capital base is actually non-profits. And the fact that hundreds of our LPs are non-profit institutions, foundations, schools, charities, and so on. We had a very funny experience recently, funny in a nice way. So, after the Zomato IPO, we called the team, DP and Akshant and a couple of the team members, to come and speak to our team on our all hands. and it was amazing. We shared with them, the nonprofits and foundations and so on that would benefit from the Zomato journey.
Wow.
At the end of it, I think one of the core teams sent us a message saying, I want to be a founder again and take Sequoia's money just to be able to serve this greater good again. This makes me want to be a founder again.
Yeah.
So I think, very deep in our DNA is this idea that, with the work we do, we can help create jobs on the front end. We can help move industries forward. In the process, hopefully we can generate returns for nonprofits. And I think when this sort of crisis hit, and even before, we just felt like it's the right thing to do. And candidly, we didn't overthink it. It wasn't some big strategy meeting. We just said, look, there's a pretty major crisis and we need to step up and do something. And let's do it with other people. And honestly, all credit belongs to Mohit, who sort of really big time stepped up, and then GV, and then all our team members basically became super involved with ACT. I think at one point, between 12 and 20 of our team members were working more than 50% of the time just on ACT, and very senior folks in the firm. In fact, some of the partners called me one time to say, hey, can you make sure we're still doing our day jobs? And can you focus on the investment side of the business so we can do the ACT stuff? And if all of us start doing it, because when they saw me jump in it also, then they were like, okay, well, some of us should keep running the business.
True.
And we try to divvy it up internally. And no, look, it is a tough time, and no matter how much we did, we knew it would be insufficient. So we just felt like it would allow us to sleep well at night, and it wasn't more complicated than that.
Thanks. We really appreciate you taking time and love the fact that you're here today.
No, thank you. I'll say the same, by the way, that I talked about Apple's launch of their card or PayPal's launch of trading. What took us so long?
That's a great time. Thank you very much. Thanks.